Hello, Culture Matters podcast. I'm excited to introduce you to our guest. Before I do that, here's a quote I picked just for this episode. If you're going to be a winner in life, you have to constantly go beyond your best. Robert Kiyosaki. Our dear friend Jake Penny is back on the Culture Matters podcast, episode 151. If you haven't listened to that episode, go listen to that episode for some backstory. But for the last handful of years, Jake and his partner Leanna have built an empire. Over 100, we're going to go into the details, over 100 Burr, we're going to go into what Burr is, real estate investment, assets, building wealth for others. And thanks for coming back, my friend. I'm excited to deep dive for our audience because they can learn how to build wealth on this podcast. You know, it's not just about culture, baby. It's about money too.
Culture is wealth, man. The five pillars: health, wealth, love, and happiness. I think that's contribution. There you go. That's culture.
Wait,
Thanks
let's
for
go
having me
into
back,
that.
Jay.
What did you just say? I want to write these down.
So the five pillars of wealth: you have health, wealth, love, happiness, and contribution. So the majority of people think that when we talk about wealth, that all it has to do with money, but it doesn't. There's many forms of wealth in the world. Like a lot of people say, well, money doesn't buy happiness. Being happy, having family. Well, they're pillars of wealth. But a great foundation and a balanced life is having wealth in all five pillars. And at the end of the day, money does buy a lot of things. It doesn't buy your loved ones back, or you still can be miserable with a lot of money. But one thing I like to say is I rather be crying in a Lamborghini than a Toyota.
So let's go one by one real quick. Health. How do you view that? And you look like you work out. Some that are listening may be thinking, I don't have time to exercise or take my health seriously because I'm trying to be successful. What's your thoughts? What's your feedback to
Um, I've honestly fell into that trap, building a successful, real estate portfolio the past 7 years, more so over the past 2 to 3. I was gangbusters every single day, trying to find deals, working, not really focusing on my health. And I blew up to like 220 some pounds. And I was a chunky monkey. And I get my blood labs done. I see an awesome panel of anti-aging doctors because health is very serious. And if you're fortunate enough to be able to do that, I highly suggest it. And I realized that I have to get my health on track. And not only does that mean working out, but that means proper nutrition, proper supplementation, going real in depth of, getting extensive labs done, microbiome tests, genetic tests, to figure out what you're susceptible to, what foods you should be eating, because we're machines. All machines are not created equal. So what they say is good for everybody is not probably good for you. Like green vegetables. My body does not process asparagus, spinach, Brussels sprouts, broccoli, things of that nature, and it's actually harmful to my body and produces a ton of inflammation. Well, that's no good, but everybody out there says that they're good foods to eat. Well, for me, it's not. So we're all unique creatures, and dig deep into health because you'll really find the riches there. And at the end of the day, if you're feeling like crap, you're not going to be able to be a high producer, high performer on a daily basis for your business, your family, your investors, everything like that. So
Did you hit a wall?
Yeah, I hit a wall. Yeah, I definitely hit a wall, a brick wall, and had to get my acting gear. So I'm
Awesome.
doing good with that now.
Contribution. That's up towards the bottom of, well, I got these five because I figure we'll go to wealth when we get into real estate. Contribution. How do you define or break down that?
Contribution can be many things, whether that's being a donor, like yourself, Jay,
Oh, stop.
to a foundation or a nonprofit charity, giving your money. You might not have time, but you might have money to give, or you could give your time, whether that's you know, going to Habitat for Humanity, being part of their process of, giving back to the community, building homes, or whatever you can contribute your time to help out with services. Maybe donate food. Like for a while there, when we didn't have money, Leanna and I were going down into the city at like 5 o'clock in the morning. We would pack our bags with bag lunches. We would work out on 12th Street in Center City at 12th Street Gym when it was around. And then afterwards, we would run the city all the way from 12th Street all the way to Rittenhouse Square. And we would give out brown paper bag food to, people that were homeless. So it doesn't matter what level you are, you can always start somewhere with contribution.
What did you learn about yourself doing that?
That they wanted the hoodie off my back more than they wanted the food. or then or they asked that if they could have blankets next time. And
wow.
But that's not what I really learned about myself. What I learned about myself is I really liked it. I really enjoyed it. That's one of the things that I'm striving to do eventually when I, hit a pillar in my life, to be able to feed like 1 million people a year. We when we were first getting started in real estate, we opened a nonprofit, realizing that a lot more goes into opening a nonprofit. It's a lot of money to start a nonprofit. The specific filings and everything and it was called Feed Philadelphia, spelled with PHEED. And we took this brown paper bag lunch or whatever it was. It was just food in a brown paper bag, a sandwich, dessert, a water bottle, some appetite, like little stuff. But it was enough to get the job done. And we wanted to take that to a grander scale at the time. And then we realized, hey, just the filing fees to get the nonprofit rolling were like 10 grand plus, administration every single year, and then donors. So it kind of like kicked the brakes a little bit. But, going forward, we're making it to a point to donate and other things, and donate our time as well, whether that's teaching people how to build wealth so that they can escape their current reality, or can escape, just better it than what they have right now. And eventually we will have, a foundation or a charity that is, feeding 1 million people a year, or giving, presents under a Christmas tree to people unfortunate come Christmas time, or filling the table at Thanksgiving for families in need. Something of that nature. I've always kind of I wanted to do.
Hey, what would you say to somebody that's doing really well financially now and says, that's stupid, I have no interest in helping anybody?
Well, then, it's the law of reciprocity. What goes around comes around. The more you give and the more value you provide to the universe, the more that comes to you. The more, they say good juju or whatever it is. How's anybody going to know, like, and trust you if you're not doing good for other people? Now, there's the flip side of that. Like, okay, well, that you may have certain beliefs of, hey, I'm not going to support, felons or stuff like that because they don't deserve a second chance, blah, blah, blah. Like, if that's the instance, then okay, there's some justification there. But people that are just like, flat on their back, they've tried every way, or like veterans is a huge thing that we want to get involved with doing veteran homes, and then like replacement for rehabilitation for veterans to where they come into our houses, yet they'll come through VA, through that subsidy, and then we'll help them get resituated to living back in the US, right? They just came back from serving, help them to get a job, help them under financial literacy, things of that nature.
We got health, we got contribution, we got love, and we got happiness. Which one are we breaking down first?
Ooh, man. There are 3 things that are not all.
So before we turn this on, we got the wife basically to your right. So maybe
Yeah,
did you hear me? Maybe you should say something nice about her.
um,
I gave you an in and that.
yeah. Hey, we'll go with happiness next, and then we'll go into love, and then wealth.
I love this.
So, happiness. Well, that's a real tough one, right? Um, we go through ups and downs every day in our life, and I mean, we are fortunate enough to live in a place like the U.S. with all the crazy stuff that goes on in other countries. So we should be happy. We're fortunate enough. However, our day-to-day basis, we kind of take that for granted, I think. Or if something doesn't go right, we get down and out and we get depressed or have anxiety. And we realize we forget where we started and where we are now and how much we've actually um what we came from and what the successes that we've overcome and the barriers that we jumped over. And like I'm a person that struggles with that. A lot of people tell me I have to read the book The Gap versus the Gain, and I
Oh,
still
Dan
have yet
Sullivan.
to. Yeah, I still have yet to read that book because I'm always like, hey, I'll reach a pillar in my life, another success, point, and I'm like, okay, cool, like that's great. It's I got here. Well, that's no longer good enough. Let's go to where's the next level. So being satisfied and content and being humble is something that I definitely suffer with. But um, you know, you got to be happy. Happiness is, I think, is in the journey of where you're going. Like that's the thrill, I think, and the longevity and being able to experience things in life that you've always wanted to.
Mm, mm.
And there can go a lot more deeper into that, but I mean that's a general synopsis of it, I
What
think.
about love?
Love, man. Well, hell, if I didn't have my partner, um, we wouldn't be where we are today. She's been by my side for 9 years now.
Wow.
And I truly dedicate success to having one partner, or having love for one other person. And you know um there's a lot of men out there that like to go around the whatever you want to call it. They like to date and do their thing, and I think, man, their life would be so much better if they just found love and just stuck with one woman and grow something, and had a life with somebody. You can life can be really awesome once you find love. But it's not like a full parabolic, upwards line. um there's there's a lot of responsibilities that come with it. There's a lot of day-to-day stuff. You support each other as much as you can. Obviously, you know you're like a yin and a yang, like you're a balance beam. The other person might be very well off in some things, and I'm better in other things. For instance, like um I've learned a lot over the years to like just release and like let shit go or not freak out. I used to be a hothead. Now I'm not anymore because I learned from Leanna. Um, and Yeah, I don't know really where I'm going with this, but uh,
I'm trying to get you points, brother.
yeah,
You're
man.
crushing it. You're crushing it. I mean, well, it's something tactical though would be for people that are not working with their or are working with their spouse. What's your advice? The most important thing you think?
Um, First and foremost, I'm pretty damn fortunate to be able to work side by side every single day with, my significant other, Leanna, and be able to work efficiently, appropriately, um, and just all around like, hey, we don't argue. If we do, it's like a couple minutes and that's it. We get over, we move on. It's like it never happened. Um, and we have the same goals, same vision. same, outlook on life and where we want to go, the legacy that we want to live.
You
So
see that as important?
that's very important, but it's also very rare too. So there's a lot of people out there that envy our relationship, and be like, oh, like, man, like you have an awesome relationship. Wish ours was like that, or how did you cultivate this thing? Um, and truthfully, I think we just got lucky, because it doesn't really exist out there. If you ever, ask or find we see these power couples. It's like, man, that's not really a thing. So it's like, hey, this is cool shit. But my advice is get on the same path, get on
Mm.
the same vision. Because if you don't have the same vision or same path or where you want to go in life, it's never going to work out. You're just going to be, miserable like a lot of people for the rest of their life and not be able to attain your true potential.
You mentioned the other day offline that you had family meetings.
Yeah, so we just recently, um, you know, uh, and I guess that could be a sixth pillar of wealth, family.
Boom.
Um, so yeah, we started implementing family like wealth, health meetings, kind of based on like the five pillars of wealth that I said. So we meet once a month with our family, brothers, sisters, parents, um, on both sides. I don't have any siblings, but Leanna does, and we meet separately once a month, and we go over expenses, projected expenses, things that we want, how much they cost, how can we afford them? Because there's no such thing as that, hey, well, I can't afford that, I can't have it. No, you can have it, you will have it. How can you afford it? And what do you have to be able to afford it? Without like, hey, let's not work more hours, right? Because we don't want to sell our soul fully. So let's get smart. How can we invest? Where can we invest? What is the risk profile look on those things? What opportunities do you have access to now? So we go over like our goals, how do we work backwards to those goals, whether that's a 1 year, a couple months, 5 years, 10-year plan. And then we'll say, hey, we'll pick these things out and we'll start creating strategic plans together to make that shit reality and make that shit possible. And we'll go over vision boards, but every single month is something different. And we have talking points, and we kind of go round the horn and see where everybody's at, what they're struggling with, how can we help, what can we implement as a family. And also we talk a lot about generational and family legacy, building like a dynasty. Because if you ever look at the richest people in the world, most of the time they've learned how to work as a team, as a family, and kept the money full circle. So we're really building that up, and building, an empire as a family.
Where did this idea come from?
Oh man, Leanna, honestly, Leanna said, "Hey, you
Genius.
need to start um, doing these family meetings because her you know her brother and sisters have a very awesome edge on life, being that they have us as mentors and as siblings. Um, and we're like, also, not to toot the horn or anything, but like, hey, I wish I had people in my family at this age, um, when I was there, well, not at their age, when I was getting started or when I was growing up to be a mentor. Like I didn't ever had anybody in my family that invested. And nobody even in my family ever graduated college. Some either dropped out or they just graduated high school and just went into the working force. Uh, but growing up, my dad had some wealthy friends, and I saw all that, and that's what kind of got me
Mm.
tasting one of wealth, to be rich and financially free. But I never really had a relationship with them at all. So I only saw their portrayed life and what they had, and I found out what they did, but I never had the conversations and never got the ability to have the wisdom passed down to me. So it's like, hey, if we can help her brother and sisters attain wisdom and attain financial literacy over time, because they're 4 years younger than us, 7 years younger than us, and then 11 or 10 years younger than us. And they have the ability to be able to supersede us if they really wanted to in that time frame. So how can we help them achieve that, or how can we help them help us achieve this family dynasty and become wealthy at the same time?
Wow. So let's go into wealth, in closing. How do we break it down, and what's your take on building wealth? What wealth is? How have you built it and are building it? I know through real estate.
Yeah, Jay. So wealth, financial wealth
Yeah, the
is,
financial piece.
I would say, is being able to do what you want, when you want, wherever you want, with whom you want, without ever having to look at a price tag, and full financial freedom. Now, there's the first thing that I said, which is like ultimate freedom, ultimate visionary life. And then there's financial freedom, which means, hey, I'm financially free. My passive income supersedes my monthly expenses. And some might say, like, hey, that's all I ever want, is to be able to not have to worry about working for the dollar, trading my hours of my life for money to be able to live. They just want to be able to have their bills paid per month, and they want to live a simple life. That's one form of wealth, and that's financially free. And then there's the other thing that I said, which I would like to do, is be able to travel the world wherever I want, fly private, you know, look at every place in the world that our creator made for us to see. There's beautiful places all over the world, but it costs a lot of money to go there, and it also takes time for you to be able to get away from your job or your business or something like that. It takes a lot of time to travel.
Mm.
So that comes from building wealth and passive income, whether that's through private equity or real estate or owning a successful business, whatever it may be. But mostly it comes from being an entrepreneur. Um, but you know, how we've created wealth is primarily, well, I would probably say 98% through real estate over the past 7 years, and specifically more so over the last 3 years. And we primarily been focusing on the BRRRR strategy, which is buy, rehab, rent, refinance, repeat. We just find undervalued assets that we can buy for pennies on the dollar and renovate. And usually we're all in around, 55 to 65%, or 60, I mean, even like 55 cents to 65% on the dollar of what the value is.
Mm.
And on rare occasions, we'll have ones that are 70 cents on the dollar. And that's what it costs to acquire the asset and do the renovations. So we're on every single deal, we're building in 30 to 45% equity on the day that we purchase it. And we've done this, 79 78 or 79 times over the last year, and we have 29 that's in the pipeline, so that are under contract. So we're looking at 107 BRRRRs in the past, say, within an 18-month time frame. So you're talking, a $20 million portfolio, millions of dollars in rents per year, multiple six figures in passive income, and millions of dollars in equity as well, that we never actually had to put a dollar of our own money out to be able to obtain, because we invest with private lenders, and we give them an awesome double-digit return where they can invest in Main Street instead of Wall Street, where they make secure, predictable, and consistent returns while making a social impact on the local community by rebuilding neighborhoods. And that's all secured by the tangible asset, real estate.
When we're buying something at a value, what are some of the things you look for?
So we look for comparables, meaning what properties have sold for in like a 0.25 mile radius. Same school district, same zip code, same municipality, same similar house, same square footage, plus or minus 200 to 300 square feet, same beds and baths. And we want to see what properties have sold for in the last 6 to 12 months based on that criteria that matches the property that we're buying. And we use that as a value point to be able to then say, hey, this is what it could be worth, right? Because it's a comparable, and at the end of the day, it's a price opinion that someone paid for it, because there's market fluctuations. So you could see that today, that value, but in a couple months from now, it could be more, it could be less. So we buffer that in as well as market contingencies of like 10% that could happen in the next couple of months. And then from there, we subtract our carrying costs, which is things of like utilities, any property maintenance like lawn care or snow removal, gas, electric, oil, hot, like water, and then we'll cut out taxes and insurance. From there, we'll subtract what it costs to borrow money, because we borrow money from, you know, individuals like yourself, Jay, that lend out of their retirement accounts, or lend out of their money market accounts, or cash that they have in their bank account. And like I said, that they want a double digit, fairly low risk investment secured by real estate. So we pay them either monthly or quarterly a return on their money. And so if it's going to take 6 months to be able to fix this property up, we adjust that, take that out, and then we're left with our that value. Then we subtract the purchase price, then the renovation cost, right? And then that's somewhere around where we're buying this property for.
When you, let's say, for those that are just wanting to get started in this type of asset class and business, if you were to go back to the very beginning, what would you say to them is like they need to really, the first thing they need to work on?
Building a solid team, and then also raising money. The whole, they always say, oh, find a good deal and you'll find the money. I think that's the most BS thing in the world, because as a new investor, nobody's going to trust you. You're new, you're green, you don't know what you're doing. You think you may know, but there's a lot of things over the years that I've taken many guru classes, courses, masterminds, read books, and this shit's not in there. You have to learn it through the hard knocks. So, finding investors that you can either partner with on a deal, or, just, hey, get them to be a lender if you can. And line that up first. Be like, hey, this is my criteria. This is what I'm looking for. Do you want to be a part of this and be able to make awesome returns secured by real estate? Then start going to look for deals, or find hard money lenders that you can get qualified for, because a lot of them out there won't invest with first time deal doers. So yeah, I mean, that's, find the money first and then find the deals.
What keeps renters?
Awesome housing. Yeah, so that's something that I think we have nailed down, is being a leader in where we provide housing and in the quality of housing that we provide. When we do these burrs, we're going in and doing full gut renovations, new electric, new plumbing, new HVAC, roofs, kitchens, bathrooms, but we're doing custom designs. So we're giving people more of a home, and they're more like residents than tenants. They feel good in our properties. It's like a fresh start for them. And they don't have to worry about anything going wrong because everything's brand new. So I think that really keeps renters, giving them an awesome product that they can actually call home and not a rental.
Yeah, where do landlords go wrong?
Chinsing out. Worrying about how they can maximize cash flow and not take care of their property, or they just feel like, hey, this property owes me nothing. I'm just going to keep rotting it out. I'm not going to do any repairs or updates to it, and I'm not going to be with the market time. So, I think some tenants or residents look at that, and they may think, whether it's right, wrong, indifferent, that this landlord does not respect this property. Why should I? Um, and that's the way I see it. So respect your property, and they'll respect the property. Give them an awesome place to live, and they'll be there forever. And they'll brag about it to all their friends too. And then their friends are calling you, hey, Mr. Jake, you have any houses? Next thing you know, you have a list of people that are trying to rent your houses before they're even available on the market. And that's where a lot of our houses go. We don't even put them out on the market anymore. They're just leased up before they're even finished.
And why do you think that is?
We've created an awesome brand. We've created an awesome culture with our product that we put out.
Hey, for the people that are struggling in real estate now, this is going to go out, the next few weeks. Whether they're in sales, selling real estate, trying to look for opportunity, what's your counsel to them?
For the people that are struggling out there, is that what you're
Yeah.
saying? Do deals. There's so many deals to be made. I mean, look at us. 107 deals in the last, within a 18-month time frame. 79 deals in the last 12 months. And then we have 29 under contract, so I'm adjusting for how long it'll take to do those, so 18 months. If I'm able to do that, Leanna and I are able to do that, I think anybody can do deals in this market. You just have to create your brand awareness, create your circle, and build a tribe that finds deals for you. You're not going to do this alone. You can't climb Mount Everest alone. So, build relationships with wholesalers, realtors, title companies, bankruptcy attorneys, probate attorneys, estate attorneys, all that stuff, so that you have an influx of deal coming from all angles, including your own marketing. And tell everybody about what you do all the time, whether they, be a Grant Cardone, just completely kill people with marketing.
What type of work ethic right now would you say is needed?
Man, buy real estate like there's no tomorrow. Like, man, you should be out there hunting for deals. Like, I think we're still in an awesome market. We're at the top, I think, and uncertainty is definitely coming and could be disastrous. From what it looks like, it should be disastrous. Will they let it be disastrous? I don't know. I don't think so. I think they'll just keep pushing it out. But money's still out there, tons of it, and they're lending, and they're still doing awesome refinances. So buy as much as you can before the debt markets start to pull back a lot, because then it gets really hard. Then you're full left to only rely on private capital, which a lot of people do not have. And once the debt markets dry up and hard money lenders stop lending, well, then you're not going to be able to do any deals unless you have private capital. So work on private capital, building that investor database, and keep buying some more deals in this market. It's always a good time to buy real estate, whether it's today or 20 years ago. You buy the property, well, here's a saying: you marry the property, you date the rate. Yeah, rates are expensive right now, but you'll be able to refinance in a couple of years, no problem.
Fastest way, easiest way for people to get to know you offline?
You can go on pennycapitalmanagement.com. Fill out we give away a free PDF on there. You can opt into our newsletter from there. You can contact us. We have a few webinars that we do that you can attend. On Meetup, we have Multifamily Masters of Philadelphia, or the Greater Philadelphia Passive Investor Club. And then our personal page is invested with jakeandleanna.com. And there's a bunch of blogs, videos, vlogs, and news articles on there.